You've probably seen the headlines. No more tax on tips. Overtime pay is tax-free. Big tax cuts for businesses. And technically, that's true. But what's underneath those headlines is much bigger and a lot more complicated. The bill behind all of this, the 2025 Tax Act, formerly nicknamed the Big Beautiful Bill,
It's the biggest bill ever passed.
doesn't just tweak the tax code, it completely reshapes it. It changes how individuals are taxed, how businesses make decisions, how payroll is handled, and how federal programs are funded. Honestly, it's probably the most sweeping tax legislation we've seen since the original Tax Cuts and Jobs Act back in 2017. So, if you're a business owner, or just trying to figure out what this means for your paycheck, stick around. We're going to break down what this bill actually does, who it helps, what it changes, and most importantly, what you need to do about it. And just a heads up, if you're only hearing about this on social media, you're not getting the full picture. Some of the biggest changes aren't flashy, but they could seriously catch people off guard if they wait until tax season to sort it all out. Let's break it down. Back in 2017, the Tax Cuts and Jobs Act gave tax breaks to individuals and businesses, but many of those cuts were set to expire in 2025. This new bill doesn't just renew those breaks, it locks some of them in permanently, like lower tax brackets and a higher standard deduction, and it adds a ton of new provisions. Some of it's helpful, some of it's confusing, some of it might surprise you. This isn't just a renewal, it's a shift in priorities. Tax relief on one side, spending cuts on the other, all in an effort to balance the books. And while some of these new provisions are permanent, a lot of them are temporary, mainly to keep the bill's overall cost down. So don't assume everything in this video is here to stay. Let's get into what people will notice first, starting with changes that affect everyday people, especially hourly workers and families. This one made headlines, and for good reason. Starting in 2025, workers can deduct up to $25,000 in qualified tip income and $12,500 in overtime pay from their taxable income. That means no federal income tax on those amounts, though payroll taxes like Social Security and Medicare still apply. These deductions begin to phase out for individuals earning over $150,000 or $300,000 for married couples. So yes, take-home pay gets a bump, but for employers, this creates a whole new layer of reporting complexity. In 2025, you'll need to start tracking tips and overtime separately, and reporting them that way on W-2s. The IRS is allowing a reasonable method to estimate those amounts for now, since official guidance is still in the works. But in 2026, that flexibility disappears. Employers will be required to report overtime directly. No more employee self-reporting. Now here's something else to think about, and it's not getting talked about enough. Because tips are now tax-free, people actually have a reason to report them. And for the first time, the IRS could get a much clearer picture of who's earning what. But here's the kicker. If this tax break ever goes away and those same people suddenly stop reporting, that's a giant red flag. Now, is that an unintended side effect or a clever way to boost long-term compliance under the radar? We'll let you decide. There's a lot here for families. First, the standard deduction increase is now permanent, which means fewer households will need to itemize, making tax filing a bit simpler. There's also a wave of expanded family-focused credits and deductions. The child tax credit is now permanently increased to $2,200 per child. The dependent care assistance limit increases to $7,500 a year starting in 2026, up from $5,000. A $6,000 senior deduction applies from 2025 through 2028 for taxpayers age 65 and up. Plus, new school choice credits, elder care exemptions, and more. And one of the most talked about, Trump accounts for children. For babies born between 2025 and 2028, the government will contribute $1,000 at birth, and parents can contribute up to $5,000 a year. The accounts grow tax-deferred and can be used for higher education, job training, or a first home, but withdrawals are locked until the age 18. There's a lot to like here for middle-income families, but it also makes the tax code more complex. And if you try to file on your own without knowing what's available, it's easy to leave money on the table. On the student loan side, starting in 2025, employer-paid student loan assistance is now permanently tax-free, up to $5,250 a year, with future increases tied to inflation. But there are new jobs lifetime borrowing caps, around $257,000, and tighter limits for graduate loans. For charitable donors, starting in 2026, you can deduct up to $1,000 or $2,000 if married, for donations to public charities, even if you don't itemize. If you live in a high-tax state, this might matter to you. From 2025 to 2029, the cap on state and local tax, or SALT, deductions jumps from $10,000 to $40,000. This includes state income tax or sales tax in states without it, property taxes, other qualifying SALT payments, but heads up, unless Congress extends it, the cap reverts back to $10,000 in 2030. If you report gambling winnings, here's a small but important change. Starting in 2025, you'll only be able to deduct up to 90% of your gambling losses, not the full 100% like before. It's subtle, but it might sting if you weren't expecting it at tax time. Now let's shift to what business owners need to know. The 20% pass-through deduction is permanent. If you run an S-Corp, LLC, partnership, or sole proprietorship, you can now permanently deduct 20% of your qualified business income. That's a big win for small businesses. And if you're a sole proprietor or C-Corp, now's a great time to talk with your accountant about whether restructuring makes sense. 100% bonus depreciation is back. That means you can now fully expense qualifying equipment and property purchases in the year you make them. It's especially helpful for capital-heavy businesses like auto shops, construction companies, or healthcare providers. Just keep in mind, Section 179 still caps out at $2.4 million, and in some cases, it may be a better option. Now, this one hasn't made headlines, but it could save businesses a lot of money. From 2025 through 2028, you can deduct up to $10,000 a year in interest on qualifying vehicle loans. But there are a few strict rules. The vehicle must be new, not used. It has to be manufactured in the US. It must weigh under 14,000 pounds. And it phases out if your income exceeds $100,000 for individuals or $200,000 if you're married. It's also not an itemized deduction. It stands on its own. Opportunity zone incentives are getting a boost, with longer deferral periods and bigger capital gains breaks for investors. If you lease property in an opportunity zone, don't be surprised if rents start rising quickly as investor interest ramps up. To offset the cost of all these cuts, Congress scaled back a number of green energy incentives. EV credits end in September 25. EV charging station credits end in June 2026. Residential energy efficiency credits start phasing out in 2025. Eligibility is tightening for large-scale solar and wind projects. If you've been banking on these to justify upgrades, double-check your timing. Now let's look at the less talked about parts of this bill, the kind that tend to catch people off guard. Medicaid and SNAP now come with stricter work requirements. That might not impact you directly, but if you hire seasonal or entry-level workers, expect more turnover and more applicants trying to stay eligible for benefits. The paid family and medical leave credit is now permanent, and it now includes insurance premiums in the eligible costs. It's a useful break if you already offer paid leave. Just make sure it aligns with your state's programs. Starting in 2026, the 1099 threshold jumps from $600 to $2,000, with automatic inflation adjustments kicking in after 2027. That's a big simplification for businesses that only work with contractors occasionally, but new reporting fields and backup withholding rules are coming too, so don't let your guard down. Two final notes. If you're part of a controlled group, the $1 million cap on deductible executive compensation now applies to the group as a whole, not per company. And if you filed employee retention credit claims improperly, enforcement is now ramping up. No new ERC claims are allowed after January 31st, 2024, and the IRS has new powers to audit and penalize abuse. So, what should you actually be doing about all this? Here's your game plan. Review your entity structure. Are you set up to claim the pass-through deduction? Reevaluate big purchases. 100% bonus depreciation is back, so it may be more efficient to invest now. Update your payroll systems. Tips and overtime need to be tracked separately, with strict W-2 changes coming in 2026. Revisit your employee benefits. Things like student loan assistance and dependent care exclusions can help you compete for talent. Keep an eye on IRS guidance. Changes to W-2s, 1099s, and compliance rules are still in development. Most importantly, don't wait. These changes are already taking effect, and the earlier you adapt, the better off you'll be when tax season rolls around. The 2025 Tax Act is going to reshape the tax landscape for years to come, and how your business responds right now could make a huge difference in your bottom line. We'll be covering more updates like this as new guidance comes out, so if you want real-world tax and payroll advice for small business owners, subscribe to our channel. We're built for people just like you. No fluff, no clickbait, just practical insight from an actual accounting firm. And if you're not sure what kind of accounting setup your business actually needs, you can take our Ideal Accounting Solution quiz on our website. You can even get a ballpark idea of what monthly accounting might cost you. Just try the pricing calculator, also on our website. And if you're ready to talk to someone, even just to ask a few questions, schedule a free consultation. All linked below in the description. Thanks for watching, we'll see you in the next video.